With the Dow down about 750 points today, the question many are asking themselves is how big of a role are the events or the lack thereof in Washington playing in the sell-off? First, there's the debt ceiling. Then there's the matter of approving a budget. And a Wall Street Journal op-ed, Treasury Secretary Janet Yellen says failure to raise the debt ceiling could lead to, quote, widespread economic catastrophe. So how much are these gyrations in the nation's capital impacting markets? Let's ask Dan Clifton. He's head of policy research at Strategic Securities. Dan, it's great to have you. It's easy to dismiss these gyrations because we've seen them time and again. Is this time different?
Yeah, Kelly, first, thank you for having me. And I would just argue after 18 months of unlimited fiscal policy, unlimited monetary policy, the risks from Washington are increasing. That is, we're moving from a pandemic to an endemic. That means we got to withdraw some of the liquidity, both from a monetary and fiscal policy side. But in addition to that, in the short run, we're going to have to deal with a number of outstanding fiscal policy catalysts, of which none of them have a good answer for how they're going to get resolved. And so I just think it's adding to the uncertainty of other issues that are out there, like the economy slowing, issues in China. And now we know over the next 2 weeks, we're going to have to deal with these issues. We've been calling it the September to remember. Some of them really aren't big events, but the debt ceiling is starting to become a bigger event for investors, particularly in the short-term credit markets, as investors begin to demand more for holding short-term treasuries because of the uncertainty on how this is going to get resolved. And so at some point, Washington's going to have to put out a plan for how these issues are going to get resolved. And both sides, Republicans and Democrats, are digging in on the debt ceiling, which means that at the very least, we're going to have some political headline risk before this actually gets resolved.
What does it mean when you say you think there's a less than 50% chance the debt ceiling's raised by October 15th? And what do you think that means for markets in the meantime?
Yeah, look, we look at the X date. The X date for when the debt ceiling needs to be raised is probably going to be sometime in late October. I think what the market is starting to say is that it's probably not going to get resolved on September 30th when we got to deal with the government shutdown and the expiring highway trust fund. But rather, you've got to let the pressure of that debt ceiling X date begin to really build in before the Democrats make a decision whether they're going to do this alone in reconciliation or whether the Republicans are going to join with them in doing it on a bipartisan basis. It's almost like you need the financial markets to pressure Congress to get to that point. Now, there are options for this to get done before October 15th. We posited today in our client note that if you take the bipartisan infrastructure deal, de-link it from that $3.5 trillion spending package and see if you can get Republican votes. Not guaranteed, but it may be a way to be able to get some sort of resolution on the debt ceiling early. We just don't know. And so we're wondering, do the Democrats have a secret plan? Well, if they have a secret plan, we're probably going to have some chaos. And if they don't have a secret plan, then we're probably going to have chaos on steroids here. Either way, it looks like we're setting up for some sort of gridlock.
Shepard Smith here. Thanks for watching CNBC on YouTube.